Hey, welcome YouTube. This is Jason with Day Trading Fearless. Today's video I want to do on divergence using the 1-minute chart with the 20 period EMA and also the 200 period EMA. The white line's the 20 period, the yellow line is the 200 period. And what I've done is taken today's trading and pretty much shown you all the different divergent setups that we had throughout the day. So I'll walk through them. But one of the things is, and then I'm sorry, we're also using the fast stochastics with a setting of 80 for over bought, 20 for oversold, and then 9-3. Okay, those are the settings using Thinkorswim or whatever other broker you're using. And then we're just using basic regular candlestick charts. So the whole purpose of divergence, kind of going back to why white charts create divergence, doesn't matter if you're trading stochastics, RSI, MACD, anything like that. It's all essentially the same thing. Just pick one. For the 1 minute, I actually really like using the stochastics. And with this, what we're doing is think of it as when we start to sell, there becomes selling pressure. Okay, so here we start to sell, the stochastics roll over, we bounce, price bounces, right? And then we start to sell off again, even harder. Okay, and it's showing you that price and the stochastic should move hand in hand. Okay, now what happens is we then bounce. We could see here we bounce, and then we make a double bottom low. Okay, but look at where the divergent or the stochastics are. They should actually be all the way back down here, but they're not, and that's what creates the divergence. Divergence is a great trading tool for us to be able to kind of look for a false move to pick up a quick scalp trade. Now for me, I only look for about 2 ticks on this trade. That's it. And I'll kind of walk you through my thing. But sometimes you get really big moves, and sometimes you just get quick small moves. Like right here, we have divergence, right? We rally, we make a high. The stochastics are way over bought. Price kind of pulls back, we roll over, we make new highs. You could see these two candles make new highs, and look at what price, look at where the stochastic is. It's down here, and then that divergence actually leads to a lot bigger moves. So sometimes they lead to multiple point moves, sometimes they're just quick little get in, get out type of scalp trades. Me personally, I love scalping. I usually look for about 2 ticks, which is with the S&P Emini is about $25 per trade. And I just kind of wait. I'm patient, and everything just becomes scale if you ever want to make more and more money. You go 5 contracts, it's $100. Do 10 contracts, it's $250, right? So it just becomes scaling, but learn a good little system. So right here, and let's kind of look at a couple of scenarios right here, right? That leads to a big down push. As you can see, sell, right? And price sells off. Again, we rally, make a high, pull back, make a new high, but look at where the stochastic is relative to the last time we made the high. And then we pull back, make a double top high right here, and look at how low the stochastic is all the way down here, and then you can look for the quick short. Okay, here we kind of rally, Again, and this is something you need to train your eyes to actually see. Right here, we make highs here. Divergent or stochastics are way overbought. We kind of pull back, make a new high, a lower stochastic, make new highs, lower stochastics, and then this leads to a very hard sell-off. Now, a lot of these type of trades, you could draw trend lines, something like this, once it breaks. But my thing, and I'll tell you, this is what I find to be one of the best ways to trade this, is we'll zoom in on this price action right here. And if you don't know what the waterfall or the stair step trade is, go back and look in my videos and look for the waterfall trade or the stair step trade. I have a couple of videos on those. And essentially what it is where we sit here and we're making higher lows. See, every candle made a higher low. Okay, when we get the divergence, your entry is to go one tick. Your entry would be one tick below that low, and your stop would be the previous high is an exit. So here, this price 95, so 94.75 would be the entry. So on this candle, when we broke down, it would fill you on the entry. You need to have the order pending in there. It'd be a sell stop market order to pick you up to go short, and then your stop would go one tick above the high, so we're looking at 96. So this entire trade, you only had about a point in, we'll say a point and a quarter worth of risk, and here you would have gotten your 2 ticks. But if you want to maybe do multiple contracts, you can always scale out too, and as price keeps going lower, you could just keep moving your price target, or sorry, your trailing stop of the other contracts lower. But for me personally, I just get me in, get me out of the market. That's what I feel is one of the best trade setups that I'm currently doing, especially with a low volume or low volatility type of markets like what we're seeing right now. But again, this will work in all types of markets. The only difference is things start to go a lot quicker. Okay, these trades set up a lot quicker, and you actually have a lot bigger moves and more falsehoods, because when volatility kicks in, it's not as methodical. So, but just to finish up here, again, we sell off, make a low. Here's the low, right? We bounce, we make a double bottom low, look at the divergence, and again, you would just look 1, 2, 3, this candle breaks above, that's your entry, your stop would go there, and look at the run it had. So I hope this helps. Here's another one. We rally, right? Stochastics, pull back, make a new high, even though it's only 1 or 2 ticks, even if it's a double top. If there's that divergence, use your candles 1, 2, 3, 4, 5, 6, 7. Your entry would have been 1 tick below. So right here, the low was 94. Your entry would be 93.75. Your stop would be 94.75. 1 point of risk, and you would have gotten your 2 ticks very quickly, and even more if you had multiple contracts or you want to hold it longer. So here's another divergence, right? Again, and the reason I'm just going to keep showing you these are so you could train your eyes to see these divergences. We fall, we're making lower lows, but you could see is we're making lower lows, we're making higher lows on the RVI. So I hope that helps. Make sure you check us out at DayTradingFearless, and good luck trading. And if you ever have any questions, just throw them in the comments. And make sure you subscribe, and we'll see you at the next video. Thank you.